All right, today's topic is partnerships. What are they and how do they work? Partnerships. So, the biggest analogy for a partnership is actually marriage. I know it gets used a lot, but it's the easiest way to think about it. It's when two or more people pool their money and skills together and share in the profit and losses of the entity. Kind of like a marriage. Unlike a marriage, you don't need to have a signed document that says you're married. So, the partnership, all you need to do is come together, pool resources, and start a business. No documents needed, which some look as a positive thing, I look as a negative thing. Without a signed document saying that you're both partners, that this is the entity that you're operating under, that has both your signatures, it can be hard to hold someone liable to any of this. So I like documentation. I'm a big documentation person, which makes sense. All right, so there's different types of partners within a partnership. Most common is a general partner, which they're the ones who can sign documents, open bank accounts, write checks, that sort of thing. So if you're both working within the business, you're usually both general partners. I'm going to stick with just two owners. It's the easiest way to think about this. The other type is the limited partner. So say person A has a fantastic idea. They need some cash to implement it. Person B comes along, decides to invest money in this idea. So they would be a limited partner. They don't have management duties, they can't sign checks, they just write a check to the partnership and then they get a share in profits at the end. Sounds good? The one thing to remember about limited partners is they're not personally liable for anything. A general partner, they're liable. They're a general partner. But an investor, aka limited partner, he isn't personally liable for something that the partnership might do, which is one of those things to think about before you get into a partnership with someone. Because what if they do something that you don't agree with, that you might not know about, since if you're both general partners, you both have the power to sign documentation for the partnership, which means you might not even know that your general partner is signing a bank loan and taking off with the cash to a foreign country. Yet you're still going to be on the hook for that since you're both general partners. The rule of thumb, I'm going back to the marriage analogy here. If you wouldn't marry them, should you really be getting into a partnership with them? Just saying. One of the other things to think about, some additional pros for being a partnership, since I have been saying a lot of negatives, super simple to form. Like I said, you don't need a ton of documentation. You also don't need a rigid corporate structure, so you don't need a president, a treasurer, VP, that sort of thing. In turn, you don't need board minutes and board meetings and bylaws and all of that. So the documentation part, if you're not into that, is you don't really need it. In addition, business losses are just divided between all parties. They can be deducted on your personal return, which can be fantastic, though if it's a business and you want to make money, losses might not be a great thing. And then if you need additional cash, you can bring in a limited partner. And it's pretty easy to do that. Now, the big downsides, as I mentioned, is you are personally liable as a general partner. And that alone is enough of a negative, so a lot of people don't even look at partnerships. You also don't assign ownership percentages. They're all just like pretty equal. And then, like I mentioned, you're responsible for the partnership debt, even if you're not the one who signed for it, if you have more than one general partner. And the big thing to think about is disagreements. It can sink a partnership. Just make sure you document everything if you are going to be a partnership. And then if you're looking like you are going to need loans or investment, limited partners are an option, but if you go to a banks sometimes have difficulty loaning money to partnerships. Just a thing to think about depending on what type of business you're doing. So overall, partnerships, there's some positives, not needing a ton of documentation. That also can be a giant negative. So it depends on how you feel about them. We don't see a ton of partnerships anymore. It used to be a bigger entity type than it is now. Now we usually see LLCs. That shouldn't stop you from becoming a partnership and going that route. Well, I hope this helped, and if it does, feel free to subscribe.